The legal industry as a whole has become a big business, and we've got firms. I think there are 58 firms that have more than $1 billion in revenue.
Lisa Smith is head of the Washington, D.C. office of Fairfax Associates, which advises law firms on business strategy.
The investment opportunity is high. I think the question is how to add value, how outside investors could add value.
In the past, when you were looking for exciting new investment opportunities, American law firms weren't on the top of the list. There's no question that the overall market is big, with revenues estimated to total just over $343 billion in 2022, up almost $100 billion from 10 years before, according to the St. Louis Fed. But until recently, all that money was more or less kept within the protected guild of those who'd gone to law school and been called to the bar. We lawyers worked for Wall Street, but we were something separate and distinct from Wall Street. Just ask Professor David Wilkins of Harvard Law School.
So you and I went to law school because we didn't want to do business. It's not just that we were not going to business school, it was a sort of an oppositional idea, as I think your Justice Powell once said, but at least distant from business.
As much as we tend to think of the legal profession as tied to traditions going back hundreds of years in Anglo-Saxon jurisprudence, it has made some fundamental changes through the years, starting with who was let into the tribe.
So we're in this wonderful Casperson room, which is filled largely with the portraits of old white men. But this is a big exception. Tell us about this.
It is. This is the first class of women who came to Harvard Law School, which is both a thing to celebrate and also a little to be embarrassed about, because these women did not come until 1950. Wow. In other words, Harvard Law School had no women prior to 1950. And this is a portrait of that remarkable group of women, many of whom went on to do quite remarkable things. It's important for us to remember, in other words, that it wasn't so long ago that the definition of merit did not include 50% of the population.
Social pressures led to changes in the 60s and 70s, but now it's a new kind of pressure, the financial kind, that is pointing to fundamental changes in the way lawyers do their work, brought on by an enormous growth in the size and complexity of the matters lawyers are taking on.
The cost of litigation, the time litigation takes, the amount of investment either a law firm or the plaintiff has to make to even be able to figure out, is it a good enough case? How can I win this case? It just is cost prohibitive for the average person and frankly for the average firm, because a law firm that takes a contingency case, that's not their only contingency case.
Boris Zeisser is a partner at Schulte Roth, where he is co-head of its finance and derivatives practice.
I think it's the need for capital, given how expensive it is to litigate, that has created this need for this outside investment.
As the cases have gotten bigger and more expensive, so have the law firms that handle them.
Top law firm partners are being recruited from one law firm to another, and they're being paid something like $20 million a year, guaranteed for 5 years. I used to joke that law firm partners are paid like middle relievers. They're now being paid like starting pitchers. You start to have that in global enterprises, in dozens of locations with tens of thousands of people, if you count all the people who are not lawyers who work in these organizations. And pretty soon you realize that if you're running one of these things, you need not only the skills of an excellent lawyer, you need to also understand how to manage a complex business.
The transformation in the practice of law has already brought with it outside investment, largely in the form of litigation finance, where investors take an interest in individual cases or groups of cases.
Litigation funding is just the securitization of litigation assets. And again, it started out as a kind of cottage industry, mostly focused, frankly, on plaintiffs' firms who are looking for ways to defray the big investment. Increasingly, what we're going to see is, by the way, companies bringing them in to bundle cases together. So just like subprime mortgages, for better and for worse, we are now seeing, litigation as an aggregate asset in which people are bundling cases together, because from the company's point of view, it's an aggregate risk.
But now there's the possibility of private financing, not just for individual cases or groups of cases, but for the law firms themselves.
Law firms borrow money all the time, and there are restrictions in every state on how a law firm can take on capital, if you want to call it generically. The more recent development was that a few years ago, Arizona and Utah as well have created a new structure, alternative business structure, ABS. It's actually not new. It's new in the United States. It has actually existed in the UK for over a decade, but it's new here. And what that allows a law firm to do, it's still a law firm. It's important to understand an ABS is still a law firm, but it's a law firm that has obtained a license, has gone through a rigorous licensing process with a committee that operates under the auspices of the Supreme Court of that state.
The best example of this is in the UK, which shortly after the global financial crisis began to deregulate what its legal structures and markets could look like. One of the things that they did was take off the restriction that the only capital that could be in a legal organization had to come from lawyers. In other words, you couldn't have external capital. They also took off the restriction that only lawyers could be partners in legal organizations. Now you can have multidisciplinary partnerships. That's meant, for example, the big four accountancy firms are now licensed to practice law in the UK.
The prospect of attracting outside investment law firms may be attractive for the partners in the firms, but it's not without its complications. Nearly all states in the U.S. forbid lawyers from sharing ownership with non-lawyers, or even sharing fees, except under certain limited circumstances.
It's not just any business. In other words, it's not the same as running a manufacturing company or even running an investment bank or a hedge fund. Because the people who are at the core of this business, who are lawyers, also have a set of professional obligations that are not just maximizing shareholder profit or short-term return. They have larger duties and responsibilities to protect and preserve the rule of law, which is core to American business, to American society, to our freedoms as a nation, to democracy.
For the profession, the question comes down to whether it can pursue both the raising of outside capital and adhere to the professional obligations each lawyer pledges to uphold when we are sworn into the bar. Boris Zeisser thinks that it can.
There is a real difference between the practice of law, I think, and the business of law. And quite frankly, having somebody who's not a lawyer, who has the financial acumen to help a law firm be more efficient, more profitable, function more smoothly, take advantage of the technological, whether it's AI or any other technological advancement, I think only inures to the benefit of the clients. And the lawyers are still subject to the same disciplinary rules, ethics rules. Nothing changes based on that.
Despite some concerns about what it could do to the profession, it looks like private investment of various forms is coming to law. But is it a good investment? As with most investments, the answer is a resounding maybe.
I would say, could it be a good investment? Well, it could be. Not every investment ends up being a good investment. But that's also in some ways similar to investing in any other service business.
Professor Wilkins recently put the question whether law firms could be good investments to some lawyers who also are venture capitalists.
We did a wonderful 2 hours on exactly this, in which both of the venture capitalists said, I'd be very hesitant to invest in a law firm for exactly the reasons that you said.
And those reasons that make investing in law tricky include the fact that the major drivers of revenue, partners and their clients, can simply walk out the door.
Lawyers are free to leave, but can it be efficient enough and profitable enough to retain the talent that it needs in order to thrive? And will the investment actually help it do those things?
I think that's the biggest risk factor, and I think that raises the question of what value outside of the people side could an investor bring? Is it technology know-how? Is it building a brand where the brand is bigger than the individual partners? And so I think there's the question that private equity in particular needs to be able to answer, which is what's the know-how that they're bringing that firms can't do themselves.
Whatever the risks or hurdles, it looks like private investments in the business of law are inevitable. It may not be in the room yet, but it's certainly knocking on the door of the legal establishment.
I mean, I get calls probably once a month from a private equity firm looking to understand the legal industry. So there's no question that they are interested in this and they're trying to figure out how to make it work. I think unless it can be 2 + 2 = 5, there's really no reason to do it. And I think that's where you also see the rub